All right, let's dive into the world of NIO. This company is making some serious waves in the electric vehicle market, especially in China,
Yeah.
And we've got this awesome Morningstar report to help us sort of break it all down.
Oh, yeah.
It's packed with all sorts of goodies like analyst notes and business outlooks, even what the bulls and bears are saying. So by the end of this, you'll have a much better grasp on where NIO stands, where they might be going, and what they got to watch out for along the way.
Yeah. You know what's really interesting about NIO? They're not content with just being another EV maker. They're aiming for the premium segment.
They want to be top dog.
In China's EV market specifically.
That's a big goal. Well, let's jump right into their latest earnings report.
Sure.
I think that's a good place to start to understand, kind of their story. And they're still in the red, unfortunately. Q3 losses are continuing a trend, even though they're delivering more vehicles.
Right.
So what's the deal there? What's going on?
Well, it seems like their operating expenses are going up, especially in marketing and R&D. And those increases seem to be kind of eating away at the gains they're making in their vehicle margin.
Okay. Yeah, and the analyst actually specifically mentions in the Q3 notes that revenue actually dipped a little, even though deliveries went up 12%.
Huh. Interesting.
It's because they had to cut prices, which obviously,
Yeah.
it hurts your bottom line.
You got to stay competitive, though, right?
Yeah, exactly.
And their vehicle margin did improve. They hit that low teens target that they had set, but it just wasn't enough to counter those bigger expenses.
So what is NIO saying about this? Are they going to change their strategy? Or are they going to, double down?
Seems like their message is basically patience, like hang in there. They're saying they want to reach mid-teen margins in Q4 and then even further expansion into 2025. So it looks like they're playing the long game. They're focusing on growth and eventual profitability.
Yeah, not instant gratification.
Exactly.
So for investors, it really is a waiting game, isn't it?
Yep.
To see if their strategy pays off. Now, speaking of investors, let's talk about what this Morningstar analyst, Vincent Sun, has to say. Because I think his notes make this deep dive even more interesting, don't you?
Oh, yeah, absolutely. So he reduced the fair value estimate for NIO to $6.80 per ADS, down from $7.60. That's a pretty significant change.
Yeah, it is.
Yeah.
What's the reason behind that?
Well, he pushed back their break-even point to 2027.
Oh, wow. So he's saying it'll take them longer to become profitable than initially thought.
That's right.
What's driving that?
So it's a couple of things. He factored in those price discounts we were just talking about, which, yeah, they needed to do that to stay competitive, but it's definitely going to impact their profitability, at least in the short term.
Right.
And he also adjusted his valuation based on the anticipated contributions from NIO's new brands, Onvo and Firefly.
Right. New brands take time to become profitable.
Exactly. It takes time and investment.
To get them off the ground.
Yeah.
But is Sun completely pessimistic? What's his overall sentiment about NIO?
No, he's not totally doom and gloom. Even though he lowered the estimate, he still thinks NIO is undervalued. And that it could be a good investment for those who are, patient.
Who can wait it out.
Yeah, those who are willing to ride the wave.
See how this strategy unfolds.
Yeah.
Okay, well, that's good news for long-term investors, I guess.
Yeah.
Now, let's shift gears a little bit and talk about NIO's overall game plan.
Sure.
Their strategy for, trying to conquer this EV market. They really seem laser-focused on capturing that premium segment in China, which is a bold move, wouldn't you say?
Yeah.
In a market that's, known for being value-conscious.
It is bold, and they're putting their money where their mouth is, so to speak. They've got these models with some pretty impressive driving ranges, anywhere from 465 to 710 kilometers on a single charge.
Whoa.
And the price tags definitely reflect that premium positioning. We're talking 298,000 to 598,000 yuan.
Yeah, they're not messing around in the budget EV space.
No, they're going for the high end.
So what are some of the key things that set NIO apart in this very crowded EV market? What are they doing that others aren't?
Well, a couple of things really stand out. First, they're really pioneers in battery swap technology, which is a pretty fascinating approach.
Yeah, tell me more about that.
So instead of plugging your car in and waiting for it to charge, you drive to a swap station, and they have a robotic system that just automatically swaps out your depleted battery pack with a fully charged one.
Wow.
The whole thing takes just a few minutes, like filling up a gas tank.
Oh, that's so convenient. I mean, who wants to sit at a charging station for hours on a road trip?
Right. Nobody has time for that.
So they're really betting big on this, aren't they?
They are. They're aiming for over 4,000 swap stations globally by 2025.
That's ambitious.
It is.
But it could be a real game changer if they can pull it off.
especially if range anxiety is a big concern for EV buyers.
Absolutely.
And the other thing they're doing is expanding outside of China with their swap station network.
They're going global. They want to be a worldwide player,
Yeah,
not just a big fish in the Chinese pond.
exactly.
So what does the analyst think about their growth potential?
Well, Sun seems pretty optimistic. His analysis suggests that NIO could hit almost 256,000 deliveries in 2025 and capture a solid 2% of China's passenger NEV market.
Wow. That's impressive, especially considering how competitive that market is. But of course, no deep dive would be complete without hearing from the bulls and the bears.
Right.
The voices of optimism and caution.
You gotta have both sides.
So let's get those contrasting viewpoints out there. What are the bulls so excited about? What's driving their optimism when it comes to NIO?
Well, a big thing for them is NIO's brand image. They believe it really resonates with consumers, especially in that premium segment, giving them an edge over those mass market rivals.
Yeah, strong branding is powerful.
Yeah.
But is it enough in a fast-paced market like EV? What else are they banking on?
Well, they're also counting on advances in battery and charging tech, particularly anything that can help with that whole range anxiety thing.
Yeah, that's a big one.
It's a major psychological barrier for a lot of potential EV buyers.
Right.
So any technology that can address that is a huge plus.
For sure. So it's interesting to see how technology is really shaping this whole EV landscape.
Mm-hmm.
But what about the bears? What are their concerns? What's keeping them up at night when it comes to NIO?
Well, one of their big worries is the rising cost of batteries. They're concerned that it's going to keep squeezing NIO's margins and maybe even hinder broader NEV adoption.
Yeah, if EVs become too expensive
Exactly.
to manufacture or to buy,
Then it could really slow down the whole transition.
that's a valid point because battery tech is really the heart of this EV revolution.
It is.
So any cost increases there are going to ripple through the entire industry.
Mm-hmm.
What else are the bears growling about?
Well, they're also worried about the competition, which is getting really fierce in the EV market.
Yeah, it's a crowded field.
It's not just startups like NIO anymore. You've got these legacy car manufacturers, the big guys with decades of experience, and they're coming out with their own EV models now.
And often very aggressively.
Yeah, they're not messing around.
So it's really a battle for customers.
It is.
Standing out is going to be crucial for NIO.
Absolutely.
Anything else keeping the bears up at night?
They're also a bit skeptical about NIO's plan to launch a mass market brand. They think it could dilute their premium image.
Ah, interesting.
And make it harder for them to differentiate themselves.
Right. Sometimes expanding too quickly can backfire.
Yeah, trying to be everything to everyone can be risky.
Now, here's something interesting. The Morningstar report says that right now, NIO has no economic moat. What does that mean? For the company and for potential investors.
Well, an economic moat is basically a sustainable competitive advantage, something that protects a company's profits from competitors. So the fact that NIO doesn't have one yet, it raises some questions like, can they build one that's strong enough to fend off rivals and maintain profitability in the long run? It's too early to say if that brand loyalty they've built will last. And that's crucial for establishing a moat in this industry.
So it's definitely a risk factor that investors need to think about. I mean, NIO is a young company in a young industry.
Right.
There's inherent uncertainty there.
Absolutely.
So I think to really understand that uncertainty, we need to look more closely at the financial projections, understand what's driving the analyst valuation of NIO. So let's dig into those details next time.
Sounds good. All right, welcome back to the deep dive. So we've been unpacking NIO's story, their goals, all the challenges they're up against. But now let's get into the nitty-gritty, the financial details. These numbers can tell a whole different story.
Yeah, time to break down the dollars and cents, right?
Exactly.
We talked about their strategy. We heard from the optimists and the pessimists. But how do NIO's financials actually stack up against the big players like Tesla, BYD?
Ooh, an EV showdown.
It's time for a financial face-off.
All right, let's do it. So first things first, revenue. How much money is NIO actually bringing in?
Well, in 2023, they reported 55.6 billion yuan in revenue. But to put that in perspective, Tesla, the giant, they brought in $12,249.42 billion US dollars.
Wow, that's a huge difference.
Yeah, in the same year. So Tesla's definitely in a league of its own when it comes to revenue. But what about BYD? How do they compare?
Yeah, how do they measure up to their fellow Chinese competitor?
So BYD falls somewhere in between. They reported 815.41 billion yuan in 2023. So yeah, NIO is trailing behind these giants. But we have to remember, they're relatively new to the game.
Right, they're still the new kid on the block.
And like we said, they're focusing on that premium segment.
Which limits their volume.
Exactly. It's not always about being the biggest.
Yeah.
It's about targeting the right market.
Choosing your battles.
Yeah.
Now, profitability, that's the make or break factor for any business, really. Are they making money?
That is the million-dollar question, isn't it? And unfortunately, as we touched on earlier, NIO is still operating at a loss. Their net loss in 2023 was 21.855 billion yuan.
Oof, that's a big number. How do their competitors compare in terms of profitability?
Well, Tesla, being the powerhouse that they are, reported a net income of $102.34 billion in 2023. Quite a contrast, huh?
Yeah, night and day.
BYD had a net income of 21.53 billion yuan.
Okay, so it's clear that NIO has some work to do to get into the black.
Yeah, they need to figure out that profitability puzzle.
It seems like their focus on growth right now and those hefty operating expenses are contributing to those losses?
Exactly. But like you mentioned earlier, profitability isn't the only thing that matters to investors.
Right.
They're also looking at growth potential, market share.
And those seem promising for NIO, at least based on the projections.
Yeah, the potential is there. But we also have to consider the efficiency of their operations.
Right. How well are they running the ship?
And the key metric for that is their operating margin.
Which basically tells us how much profit they're making for every dollar of revenue.
So what does NIO's operating margin look like?
Well, in 2023, it was negative 41.8%, which is pretty steep.
Right.
Again, those R&D and marketing costs are playing a role.
Yeah, those investments are hurting them in the short term.
But the good news is the analyst is projecting improvement. He thinks it'll reach 1.7% by 2028.
Okay, so there's hope on the horizon. But of course, as with any company, especially in a fast-moving industry like EV,
Yeah, things change quickly.
there are risks, uncertainties.
That could throw those projections off track.
Absolutely.
And one of the biggest uncertainties for NIO is capital. Will they be able to secure the funding they need to fuel those ambitious growth plans?
Yeah, they're burning through cash right now.
If they can't access more funding, it could put a real strain on their operations.
And this brings us back to that very high uncertainty rating from Morningstar.
Right. It's a risky bet.
Investors are basically betting on NIO's ability to overcome these financial hurdles and come out on top in the EV market.
It's high risk, high reward.
Exactly.
They're playing the long game, aiming for ambitious growth, pushing the boundaries of their technology.
But the road to success is bumpy.
It's paved with challenges.
And only time will tell if they can actually break through.
And achieve that sustainable profitability.
So for our listeners who are thinking about investing in NIO, what should they take away from all of this?
Well, first and foremost, you got to be comfortable with that high uncertainty.
It's a gamble.
They have a lot of potential, a strong brand, innovative tech, a clear vision.
But they also have a lot of challenges ahead.
Fierce competition, profitability struggles, and those financial hurdles we talked about.
So it's a tough call.
It could pay off big, but it's not for the faint of heart.
It's crucial to do your own research, understand your risk tolerance,
Absolutely.
and decide if NIO really aligns with your investment goals.
This deep dive is just a starting point.
It's a way to get you thinking, to equip you with some knowledge.
The world of EV is constantly changing,
It's fascinating.
and NIO is definitely a company worth keeping an eye on.
Now, before we move on to the final part of our deep dive, where we'll really dig into those unique selling propositions,
Like that battery swap technology.
we want to hear from you. What are your thoughts on NIO's future?
Do you think they have what it takes to become a global leader?
Leave us a comment below with your insights.
And be sure to like, share, and subscribe to Podcast Finance Daily so you don't miss any of our future deep dives into the world of finance.
All right, welcome back to the deep dive. We've been talking all about NIO, their journey, their financials, their goals, the challenges. But for this final part, let's focus on what really sets them apart. This innovative battery swap technology they've got, and the whole ecosystem they're building around it.
Yeah, it's a pretty bold move. Most EV makers are all about those charging stations, but NIO's going all in on this different approach.
It's a whole new way to think about refueling when it comes to electric vehicles.
Yeah.
So how does it actually work? Is it really as simple as just swapping out one battery for another?
Basically, yeah. Think of it like this. Instead of plugging your car in, you pull into a swap station, and they have this robotic system that automatically replaces your empty battery pack with a fully charged one.
And that's it.
Pretty much. The whole process takes just a few minutes, like filling up your gas tank.
Wow, that's amazing. It definitely solves that whole time issue with EV charging. But what about the logistics of setting up this whole network? I mean, NIO is aiming for over 4,000 stations globally by 2025.
Yeah, it's a huge undertaking.
It's a lot of stations.
It requires a ton of investment. They need to build the stations, make sure they have enough batteries, and make sure the whole process is smooth and reliable.
Yeah, there's a lot that could go wrong.
Definitely. Any problems with the system could really hurt their reputation.
So it's a risky move,
It is.
but potentially very rewarding.
High risk, high reward.
So what are the benefits if they can actually pull it off? Why are they so focused on this approach?
Well, they're addressing some of the biggest pain points for EV drivers, and they're hoping those benefits will outweigh the risks. First, like we've talked about, range anxiety. Imagine being able to get a full charge in minutes instead of hours.
Yeah, that'd be a game changer.
It is, especially for long trips. It could convince a lot of people who are hesitant about EVs because of range.
Yeah, that convenience factor is huge.
People are used to the gas station model. They want that same speed and ease.
What other advantages does battery swapping offer?
Well, it could also lower the upfront cost of owning an EV
Yeah,
because they can sell the car without the battery. It makes it more affordable for more people.
that's smart, especially in a price-sensitive market. But how does the financial side of things work? Do customers have to buy the battery separately?
They have this battery as a service model. So you basically subscribe to a battery plan and pay a monthly fee to use their swap stations.
So kind of like leasing the battery
Exactly.
instead of owning it outright.
It lowers the barrier to entry for EV ownership and creates a recurring revenue stream for NIO.
Smart business move. But what if other EV makers don't adopt this technology? Could NIO end up with a system that nobody else uses?
That's definitely a risk. The success of this whole battery swap thing depends on widespread adoption, like we see with charging stations. If NIO is the only one using it, it could limit their growth.
So they're not just building a company, they're trying to create an industry standard.
They want everyone to do it their way.
It's ambitious,
It is.
but if they succeed, they'll have a major advantage.
A real leg up on the competition.
It's a classic example of disruption,
They're shaking things up, pushing the boundaries.
trying to create a whole new way of doing things.
It's exciting to watch, even with all the uncertainty.
Well, that about wraps up our deep dive into NIO. We covered a lot of ground today.
We did.
For their financials, to their challenges, their ambitious plans, that battery swap technology.
We looked at the pros and cons, the different arguments.
Try to give you a balanced perspective on their potential and the risks they face. We hope this deep dive has given you a better understanding of NIO's journey. They have a lot of promise,
They do.
but also some big hurdles to overcome.
Ultimately, their success depends on execution.
Can they make their vision a reality?
Can they navigate this competitive market?
Can they convince the world that battery swapping is the future? But here's one last thought for you to consider. Could this approach be the key to mass EV adoption? Not just in China, but globally.
Something to think about.
We encourage you to keep learning about NIO.
And the whole EV space.
It's a fascinating world.
And if you enjoyed this deep dive,
Be sure to like, share, and subscribe to Podcast Finance Daily.
for more insightful discussions on all things finance.
Until next time, keep learning and stay curious.